market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it could be a decision day at the U.S. Supreme Court for President Trump's flagship tariff policy. More on that in just a moment with the head of our trade coverage. But first, we begin with Trump's other battle against the Federal Reserve. J.P. Morgan's chief executive, Jamie Dimon, says a criminal investigation into the Fed undermines central bank independence. But President Trump says he's wrong.
I think it's fine what I'm doing. We have a bad Fed person. He was extended by Biden. And, yeah, I think he's wrong. I think it's wrong. He's done a bad job. We should have lower rates. Jamie Dimon probably wants higher rates. Maybe he makes more money that way.
Let's get more from our Bloomberg senior editor, Alistair Bull, who's been covering, of course, the Fed for many years. Alistair, what's been the wider reaction to the DOJ investigation?
Morning, Francine. So I think Jamie Dimon's response speaks for a lot of people on Wall Street who are very unhappy, very alarmed, very nervous about this attack on the Federal Reserve's independence. The president, of course, is right. No one's above the law. But, you know, the wider narrative here is him using the Justice Department to target people that have annoyed him, to pursue vendettas, and in this case, to lean on the Federal Reserve. And, I mean, that's not unusual for presidents to want lower interest rates, but President Trump has taken that to a much more public and aggressive level than any of his predecessors. And I think the wider question here is how does the Fed survive this onslaught? It was designed to withstand public political pressure, and now we're going to see that tested.
Will markets start to take more notice, and what does Congress do about it?
Those are the right questions. You know, Jamie Dimon, Wall Street titans, central bankers around the world will weigh in. They are doing. The only two sources of pressure that this White House are going to respond to are the bond markets and Republican lawmakers. While the president appoints people to the Federal Reserve, the Senate has to confirm them. You've got senior Senate Republicans publicly saying they're very unhappy about this and saying, in the case of Republican Senator Tom Tillis, that he's going to block any Trump appointments to the Fed. Basically, they're saying Trump can't have his Fed. That's going to really matter. Now, the bond market, it's hard to get a read off that. It's a little bit better than it was yesterday, but you had a pretty mild CPI print. It's kind of a little bit in two places. It's reacting to the economic data as if this is business as usual, while hoping that the Fed sort of blows out, that the Justice Department finds an off-ramp, or this is somehow resolved. We'll see how that goes. The ball is kind of in Congress's court, and then the other check and balance, of course, is the Supreme Court, and it is coming to them later this month.
Thank you so much, Alistair. Bloomberg senior editor there, Alistair Bull. Now, the Supreme Court could announce its decision on the legalities of three-quarter of President Trump's trade policy as soon as today. Brendan Murray, who leads Bloomberg's trade coverage, joins us now. We've been waiting for some kind of decision for quite some time. Brendan, how likely is it we receive a ruling today?
Yeah, probably as likely as it was last Friday. We know that they have opinions on the schedule. There's an opportunity for them to issue this ruling on tariffs, but they also are going to hear oral arguments in a case, and so there's a question as to whether they'll do both of those on the same day. So we'll be on high alert for any decision out of the Supreme Court in Washington at 10 a.m. The bottom line is the Trump administration says no matter what happens, tariffs are going to be part of our program. If we lose at the Supreme Court, we have options that we're going to roll out very quickly to make sure that the goal of reshoring manufacturing and fixing trade imbalances maintains the momentum that the president wants to keep heading into the midterm elections.
So what are the key points of contentions? And, Brendan, what happens if the U.S. administration is then ordered to cancel these new import tariffs?
Yeah, I mean, the big question is what's going to happen with refunds. There are questions as to how complicated that process is going to be. And then there, of course, is the question of uncertainty. We had a lot of it last year as all these tariff announcements were rolled out. They're going to be replaced by other sort of tariff authorities that are unknown, how they're going to be directed, at which countries, at which levels, taking effect on which dates. And so it's just there's a whole nother cloud of uncertainty coming, it's definitely not the end of the problems that American importers are facing, trying to understand what their costs are going to be through tariffs from this administration.
Much. Brendan Murray there, of course, in charge of all of our trade coverage. Now, markets facing a packed agenda of potential catalysts. With us now, Ralf Preusser, head of G10 rates and FX research at Bank of America, and Omotunde Lawal, head of EMEA corporate credit and emerging markets corporate debt at Barings. So thank you both for joining us. Omotunde, let's start with you because there's just a lot going on, and a lot of it is coming from emerging markets, or I guess U.S. foreign policy in certain countries. I mean, what's the greater risk to markets, that there's just so much going on that it could lead to some kind of shock, or do you look at case by case what happens to the energy markets?
I think it's really case by case, because at any point in time there's always lots of different news points that we're following. But certainly since the start of January, a lot of the excitement has really been about Venezuela and the energy market, and really what that means for geopolitical evolution of geopolitical decisions over the year. For us, a key part of it is really watching how the energy markets react to Venezuela, which consensus seems to suggest that, you know, it's in the near term probably not a huge amount of impact on crude prices. But the Iranian part really brings a different dimension to it, because we've seen oil prices spike since the tension ratcheted up with Iran. And that's really been around the fear that 1.4 million barrels of oil a day from Iran comes out of the market. Now, we haven't really seen U.S. escalate directly in terms of, you know, capturing or sanctioning or putting an embargo on crudes carrying ships carrying Iranian crude. But
it's a threat for the moment.
The threat for the moment. But the minute we see things like that, which happened with Venezuela, I think that then takes it up a notch. And then it's really about what then happens with the knock-on impact to China. Because at the end of the day, this is really about China's energy vulnerability and what they do in response. And this is in a year where China is really trying to shoot for 5% growth. And there's a lot at stake here.
It's true. We do get, you know, of course it's important to go into the details, but actually this is almost an affront against China, right? After we saw more positive signs between the two countries at the end of last year. Ralf, where do you see the biggest risk for markets right now?
For my markets, it's not too different, actually. It is all about the link to oil prices. When you look at geopolitical events like the ones that we've been talking about, the response of both the dollar and the G10 rate market is actually fairly inconsistent. It really depends on how oil prices react in response to those geopolitical shocks. And there we have two supply shocks potentially working in opposite directions, obviously one much bigger than the other. But that is why I think the rate market has done so little and the FX market has done so little, despite what are fairly unprecedented developments.
So what happened, I mean, when you look at dollar, for example, are we going to see a move away from dollar because of some of the foreign policy, or does it just take a lot of time to filter through some of the markets?
We've obviously had a ton of discussions around the whole dollar debasement story and reserve diversification story last year. I don't think we've really seen a meaningful accelerant. If anything, a lot of those moves have actually slowed down because things had calmed down. But our underlying assumption is still, and you can do that through multiple lenses, whether it's through some kind of mean variance portfolio optimization process or just generally questions about, you know, correlations and hedges, that we will see an increased effort to at least hedge a larger portion of the FX risk of dollar asset exposure, which just still opens the door for a gradual decline in the dollar over the course of the year.
Omotunde, are you expecting China to retaliate, given what the U.S. is doing, again, indirectly?
Well, I think there's a lot to watch there, right? Because we've seen with India recently where U.S. put extra tariffs on India for buying Russian crude, but they didn't put the same tariffs on China. Now you sort of extrapolate that here and say, you know, would the U.S. put extra tariffs on China for buying Iranian crude or the Venezuelan crude as well? And the jury's really out, because that was a hard-fought truce between U.S. and China. So, you know, if I had to go one way or the other, I'd say it's probably not worth the U.S. sort of unraveling that truce, but it's certainly something key to watch. It's also key for us to watch what that means in terms of the weaker dollar, what that means for how other nations react. This morning we've seen the UAE making comments around having to have a think about what extra tariffs, extra 25% tariffs on Iranian trade means for them, because the UAE certainly does a lot of trade with Iran in terms of food, commodities, Persian rugs, things like that. And, you know, does that move into the grey market? Do they have to source all these goods elsewhere? What does that mean for inflation in the UAE? These are all the things everyone has to watch. Would China retaliate? Does China have the ability to retaliate if China's sort of source of energy purchase from Venezuela is shut off, Iran is shut off, you know, it lives only Russia, really. And so China really has to think strategically about its own energy security as well.
Yeah, but is this a negative overall for most emerging markets?
No, I think actually, contrary to that, I think what Ralf is saying is very true. A weaker dollar is good for EM, right? We've seen gold prices rally. You know, a lot of the commodity prices are actually doing quite well, which is always good for EM generically. And so actually, this is quite positive for EM, because the other part of this is actually some of these regime changes, the regime change in Venezuela, the regime change in Iran. Some of these are actually good for EM because you're getting rid of some of these sort of legacy regimes, which actually starts to make certain parts of EM more investable for the future as well.
Ralf, how do you see the U.S. economy right now? So we're getting, again, a couple of data points this week. This is after a difficult end of 2025 because we just didn't have the data. So it's unclear what kind of market we're looking at.
Yeah, I mean, so first of all, our take on the labour market is that it's confirmed our suspicion, which is that a lot of the slowdown in payroll growth is probably due to the supply side of the labour market, meaning the changes in immigration policy from the Trump administration means that the break-even rate of job growth for the U.S. economy is just a lot lower than it used to be, and therefore we can have a weak job creation and a stable unemployment rate at the same time. And if you look at the increase in the unemployment rate, it is there, of course, but it is so slow that it really doesn't speak of a U.S. economy that is slowing down to any meaningful degree, which is also borne out by most of the activity data that we have, as well as Bank of America's own internal data, if you look at the B of A Institute, for example. So we remain quite constructive. I think the market is also at risk of underestimating that the fiscal impulse that comes out of the One Big Beautiful Bill kicks in as early as February. And that will obviously help to... yes, but you're asking about activity, so I'm going to answer on activity first. It's going to help support activity data for the time being. And to the question that was asked a second ago about the US-China relationship, I think there is also the broader question of how does the US behave in all of this, knowing that we go into the midterms.
Yes.
And knowing that cost of living has been such a large component of the US political discourse over the last few years. So is there a scenario where the US actually tries to de-escalate on trade to some extent because it knows that it could hurt some of the campaigns that they're contesting?
Ralf, when you look, actually, I don't know what happens, of course, with the Supreme Court, and I don't even know if we have a decision today. You know, your guess is as good as mine. But if they do say that they have to pay back the tariffs and that they're illegal, what happens to markets?
Of course, I'm supposed to say I know, but so the market is going to, I think, immediately raise the question of how do we actually fund any refunds that might need to be paid. Does the Trump administration try to slow walk those refunds? And then what happens longer term to the deficit outlook? The refund question I'm personally very relaxed about. It's going to be done in bills. There's no end of demand for bills, so that really isn't an issue. The more interesting question is the longer term deficit question, because we've all been pretending as a marketplace that the One Big Beautiful Bill is counterfinanced through tariff revenue. And it isn't, because it's unreasonable to annualize current tariff revenue for the next 10 years. So if they lose on IEEPA, that should bring back the question of the longer-term evolution of the deficit. So for choice, probably still a steepener. And then there's a question about the fiscal impulse that comes out of a negative ruling on IEEPA, because short-term, that is fiscal stimulus. So maybe you reduce some more of the cuts that are priced in near term, but also priced in a bit more longer term stickiness for inflation.
Yeah, and I want to get back to inflation. Omotunde, I mean, we were trying to figure out, how should we think about 2026 differently to 2025? And if you think that 2025 is maybe the year where we understood exactly what President Trump wants to do in terms of foreign policy, 2026 is the year where we see whether countries retaliate or not. Right, and so this goes back to the China question. This could push inflation up. Like, how do you think about 2026? Could it be the year where a lot of the emerging markets take do they have to choose between China and the U.S.? Do they fight back on tariffs, or is that again something that we just need to watch out week by week?
I think we'll see more of what we started to see towards the tail of 2025. And I think we're starting to see that with the EU-Mercosur trade deal.
Yes.
You see EU trying to be part of the transatlantic agreement as well. These are sort of strategic moves where a lot of the former U.S. allies, or a lot of the current U.S. allies, realize that actually they do need to diversify their reliance on the U.S., right? It's about that sort of stability in U.S. foreign policy. If I can't rely on you, then I must find a plan B. And we're starting to see that, and I think we'll see more of that. I'm very excited by that EU-Mercosur trade deal. I think that's very good for LATAM, the Brazils, the Argentinas, the Paraguay. And that's good for both EU and Latin America. I think Canada is making the same sort of overtures as well, looking for ways to sort of expand its, or at least wean itself off the U.S. dominance. So I think we'll see more of that in 2026. But I think, as Ralf says, I think 2026 also is really about midterms for me. It's really about watching what Trump does for the midterms. And so all these affordability policies, this 10% cap on credit cards, the housing thing, these are all things. And actually, in the grander scheme of things, some of the oil shenanigans that are going on with Venezuela and Iran goes back to that. He says he wants oil at $50 a barrel. All of that feeds into affordability and U.S. midterm. So I think that's a slightly more guiding star for me for 2026 in terms of how I think things evolve. But I think on the other side of that, I think EMs and other countries certainly would be looking to win themselves away from the U.S. sphere's influence as much as they can without antagonizing him. Okay, Ralf, very quickly, how do you play it on the currencies? Your favorite pairing?
We've actually taken a ton of risk off the table on FX recommendations. So for the first time in a very long time, we're no longer short the yen.
Right. That's big news.
It is big news for us, given how out of consensus we have been on the yen for a long time. I think one of the things that we still like that's quite out of consensus to be short the Aussie as the currency that is most exposed to any potential correction in risk assets.
Thank you both for joining us. Ralf Preusser, they're head of G10 rates and FX research at Bank of America, and Omotunde Lawal, head of EMEA corporate credit and emerging market corporate debt at Barings. Coming up, a key supplier of munitions to Ukraine plans what could be the largest ever defense IPO. Details next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, shares of the largest U.S. banks closed lower on yesterday, after JP Morgan 2 days ago issued an uneven earnings report. Despite some unexpected misses, the chief executive, Jamie Dimon, sounded an optimistic tone on the broader American economy.
If you ask me, in the short run, call it 6 months and 9 months and even a year, it's pretty positive. Consumers have money. There's still jobs, even though it's weakened a little bit. There is a lot of stimulus coming from the one big, beautiful bill. Deregulation is a plus in general, not just for banks, but banks will be able to redeploy capital. But the backdrop is also important, but the timetables are different. Geopolitical is an enormous amount of risk.
Well, Charlie Wells joins us with the very latest. Charlie, good morning. Based on the latest results, what is going wrong and what is going right for JP Morgan?
Well, Francine, if you take a look at this drop, it's pretty dramatic, and you start to wonder, aren't we in the middle of a banking rally? And basically, we went into this earnings season with a lot of optimism. We're entering it. We're kind of in the middle of it with some questions here. And I think one of the questions that was raised yesterday was about the positivity around investment banking income. At JP Morgan, there was a surprise drop in fees from debt underwriting. That really seemed to displease the market yesterday. There was a drop of over 2%. Analysts had been expecting growth of 19%. So that really ate into some of the sentiment around JP Morgan and the broader banking sector. But if you look at that report, it was mixed, right? So we had, misses on the investment banking front, but strength coming from those trading desks. So creating a more mixed picture as we get into the depths of this earnings season.
So we'll get more bank results later, Charlie. What are analysts expecting?
That's right, Francine. So I think the key question here, as Citi, as Bank of America, as Wells Fargo start to report later today, is does this bank rally have have legs, because when you look back over the course of the past year, tuning out some of this noise that we've been hearing more short term, you do see that significant rally. You do see the KBW Bank Index of major lenders outperforming the broader market. Do we start to see some of these patterns, though, that could take steam out of it, particularly on that investment banking front? I think that is a key question analysts are going to be asking as these results start coming in.
Charlie, thanks so much. Charlie Wells there with the very latest on U.S. banks. Now, the Czech defense firm CSG has confirmed plans to list in Amsterdam in what could be the biggest ever defense IPO. The company is a key supplier of munitions to Ukraine, so let's get more details with Charles Capel, Bloomberg's European Equity Capital Markets editor. Charles, thanks so much for joining us. So first of all, what's driving investor appetite to the listing, and how do current market conditions look like?
Right. So the first side of this is that investors are really being driven by European commitments to further defence spending. There are billions of euros expected to be ploughed into European governments increasing their defence capabilities, restocking after supplying the war in Ukraine, and that is expected to continue for a long period of time, especially under this US pressure for NATO members to increase their spending. So that's driven a wider market uplift. The defence companies have been the darlings of European investors. Already this year, defence company shares are up 17%. They're up 100% over the last 12 months. So against that backdrop, CSG is looking to capitalise on that momentum, and coming to the market, they will raise new funds, but their main shareholder will also sell a significant amount of shares, which will, of course, put some cash in his bank.
So, Charles, the company is also only planning to float about 15% of its shares. So how does that affect liquidity and valuations in the aftermarket?
Okay, so then 15% is not a massive stake of the company, but the thing we need to remember is this is a really, really big company. Right. In previous reporting, we've heard that they're seeking a valuation of as much as 30 billion euros. So 15% of that then does get to some proper money. And there is a certain size of a deal that the market will take. Already it is relatively large. What we have seen in similar companies, and what we could see with CSG, although there's of course no guarantee, is that the shareholder may continue to sell down their stake as the months go on, and that would increase the free float, it would increase the liquidity in the trading. But importantly, if this does start to happen, then it could also introduce a bit of an overhang into the shares, the expectation that there will be more supply of shares into the market, which could temporarily depress the share price. As you said, no indication that the shareholder plans to sell more.
Charles, thanks so much. As always, Charles Capel there, Bloomberg's European Equity Capital Markets editor. Now, coming up, the World Economic Forum outlines what it sees as the top risks for 2026. More with Saadia Zahidi, the WEF Managing Director, next. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. president hits back at criticism of the criminal investigation into Fed Chair Jay Powell. The Attorney General who subpoenaed him says no one is above the law. A key supplier of munitions to Ukraine plans what could be the largest ever defense IPO. Sources say the Czech firm CSG could raise at least 3 billion euros. Plus, Donald Trump tells Iranian protesters that help is on its way as human rights activists say at least 2,000 people have been killed. So let's stick with that story. And Donald Trump has called for anti-government protesters in Iran to continue saying he will act accordingly once he knows how many demonstrators have been killed. The region remains on high alert for another possible U.S. intervention.
Iran says that it will retaliate in the instance of U.S. strikes against U.S. assets in the Middle East. What do you say to U.S. service members about why it is worth the risk to intervene in Iran?
Yeah, Iran said that the last time I blew them up with the nuclear capability, which they don't have any longer. So Iran said that the last time. They better behave.
Let's bring in Bloomberg opinion columnist Mark Champion. Mark, what is the state of protests on the ground now?
Well, they're continuing, and we throughout now we have very little detailed information about exactly what's happening. But as far as we can tell, this is the death toll is really rising beyond previous such protests. We're now talking in the thousands. We don't really have a firm number, so it may turn out differently once this is all over. But it looks like these are very, very bloody. It's a very bloody crackdown, and also that the prosecutor general in Tehran has said that the protesters are enemies of God. Which is actually a criminal charge in Iran, and it's one of the most serious that you can be charged with, and it carries the death penalty. So this is, they are really ignoring Trump's warnings that they better stop the killing or else, and that is pushing, the U.S. towards some kind of further action.
President Trump says help is on the way. Mark, so what does a U.S. intervention look like at this point?
We really don't know. So you can sort of work through different scenarios and say what doesn't look terribly likely. Something like what we saw, very kind of quick and clean, relatively, in Venezuela, where the president was removed. That seems really quite unlikely to happen in the case of Iran, not least because there would be no element of surprise. It probably won't be that. And then as soon as you move on, you start to, ask some big questions. If you really want to remove the regime and stop the killing, the most reliable way would be to put boots on the ground. That isn't going to happen. And then, what can airstrikes do? What can they hit that would actually stop the Revolutionary Guard? Would they be able to use some of the extraordinary intelligence that Israel has had in the past? Not sure if it still has it now, as to the movements of Iran's leaders in order to target some of them. It's very hard to know until this unfolds.
Mark, what do we know about the casualties? I know that there's also, been very difficult to actually get any information out of the country. Yesterday, there was talk about maybe Starlink playing a bigger role. But what do we know so far?
So, we don't know a lot. So there is an organization in Norway called Iran Rights Watch, Iran Human Rights, rather, I'm sorry. And they follow this quite carefully. They acknowledge that it's much harder this time because of the difficulty in communicating, in getting the kinds of videos out that they've had before. But what they say is that they were able to get data from about 10% of Iranian hospitals and from around half the provinces. And from that, they were certain of 734 deaths as of yesterday. But they estimate, that based on that we are talking in the thousands, probably low thousands.
Okay, Mark, thank you so much. Of course, we'll continue covering the story with Mark Champion, a Bloomberg opinion columnist. Now, geoeconomic confrontation is a top risk for the year ahead. That's according to the World Economic Forum's Global Risk Report, which is publishing ahead of the annual meeting next week in Davos. Saadia Zahidi, WEF Managing Director, told me what most surprised her in the report and how people are thinking about risk.
I think it's become very clear that geoeconomics, geopolitical confrontation, this is really what's top of mind for 2026, but also for the next 2 years ahead. And what's been somewhat surprising is that people are more concerned about the turbulent outlook in the next 2 years and are, I wouldn't say sanguine, but a little bit more see that the outlook over the next 10 years could be more positive. Now, that's not to say that things are not also seen as turbulent, but we are seeing a percentage shift towards slightly more sense that things will be, yes, unsettled, but a little calmer than they have been in the next 10 years. So I think there's a sense that all of those risks are coming together here and now, but there is still the potential for leaders to take action in the decade out.
I mean, is this because of the uncertainty coming out of the Trump administration that geoeconomic uncertainty has increased so much, or is it in all parts of the world with many countries?
So I think it's the rise of tariffs, it's the rise of sanctions. If you look at the sanctions-related data, that has nearly doubled in the last few years across multiple types of sanctions. It's investment screening, it's the control of critical resources. So what used to be economic policy and international cooperation has now started to turn into economic weaponry. And I think that's really what we're seeing this rise why we're seeing this rise in the risk.
I mean, does this mean that chief executives are unsettled because they don't know how to do their supply chains, or do they worry about the impact this has on the economy?
So I think it's both, right? So there is, with multiple risk factors all coming together at the same time, there is this concern of how do you make decisions? Who do you trust? Which companies, which countries? How do you make any kind of policy for the longer term? How do you make today investment decisions when you don't know what the policy outlook is like in 2 to 3 years' time, especially with longer term investments? So I think there's some of that coming through. But then in addition to that, in this more unsettled global economic outlook, there is, of course, concern for what happens to developing economies. There's, of course, great power competition, but what's the pathway to growth and development for some of those smaller economies? That, I think, is together the picture that we're seeing both on the business front and in terms of national policymakers' views.
If you look at growth around the world and inflation, it's been okay. Again, is there a danger that we see a supply shock, that there's some kind of shock that actually turns everything on its head?
So I think this is where the worry really lies within this report. It's multiple risks unfolding at the same time. But, of course, much of this is in our control today, but the capacity for international cooperation is far more reduced than it has been during previous shocks and previous crises. So how would global leaders deal with a financial shock if there were to be one today? If some of the economic risks have been the ones that have risen the most in the rankings, still in the mid-tier, in the between 10 and 20 in the rankings, but they've risen the fastest by 8 or 9 points over the course of the last year. So if there are growing concerns about asset bubbles or about inflation, does the coordination capacity still exist in the multilateral system and in global economic institutions?
There's quite a lot of AI anxiety as well. Does this come from, again, the change of the nature of jobs? So not enough people will be hired and you could see a downturn in labor, or is it about AI company valuations?
So this is the risk that shoots up between the 2 and 10 year time frame. And what that means is, in the next 2 years or so, no one is expecting that artificial intelligence is going to create major displacement across societies and economies. But when it comes to that 10-year outlook, there's a real sense that we don't have enough checks in place, there isn't enough governance in place, and those anxieties generally relate to, 1, labor markets and what will happen there, 2, societies. What does this does to misinformation and disinformation? And 3rd, how does artificial intelligence and geopolitical confrontation come together? And how does AI get deployed in defense systems?
What does the future of work look like? And when you go around speaking to chief executives and heads of states, are they aware that it will largely depend also on their policy response, or are they leaving it to the tech companies?
No, it's very clear from the risk report that number 1, most interconnected risks. So the risk that impacts everything else the most. Number 1, inequality. Number 2, the risk of economic downturn. And central to both of those is this point that you've made around unemployment and the future of work. That's what people are really concerned about. Will we start to see permanently K-shaped economies with some sectors doing well, other sectors not doing so well, and will AI actually supercharge that? So the way we're trying to look at this, including next week at our annual meeting, is take a much more scenarios-based approach. So not try to go for any direct A to B type of predictions, not try to look at this in terms of specific tasks and roles, but actually try to look at scenarios. And those scenarios will not only depend on how fast technology is integrated, it's also going to depend on how quickly people adapt. And that's where governments and businesses have to step in.
Well, that was Saadia Zahidi, Managing Director at the World Economic Forum. Now, the French far-right leader, Marine Le Pen, said she and her party were never aware they might be crossing a line as she seeks to overturn an embezzlement conviction. It's a case that will determine whether she can run in next year's presidential election. Well, Georgina Wright, Senior Fellow at the German Marshall Fund, joins us now. Georgina, thank you for joining us. So what does this mean for French politics? Is there a feeling actually in her party, she has a much younger possible successor, that he would be the right candidate anyway because he's more popular?
Yeah, so I think there are two things that really matter here. The first is the context. Why has she been found guilty? I mean, Marine Le Pen is mostly known as a contender in the presidential election, but she was also a member of the European Parliament between 2004 and 2017, and also president of the National Assembly, the Rassemblement National, her party from 2011 to 2017, and she was found guilty of basically hiring assistants to work at the European Parliament, but actually using their time to work on national rallies, so national politics instead. Now, what it has done is that at the moment she's barred from running in the next presidential election, and we know that she wants to run, we know she wants to become president, and until we know whether or not her appeal has worked, we don't know who could succeed her. And as you say, Jordan Bardella seems like the natural successor. He's shy of 30, he's extremely popular, he's often ahead in many of the polls as the most successful politician in France. But until we know whether she can run or not, the National Assembly can't really run with a candidate and start building a campaign around him.
Georgina, what's the mood in France? I mean, do they think that this is right, that she's, prosecuted, or did it actually bring her or her party more voters if this is not overturned?
Really split, actually. I mean, I think in France there is a general tendency to really trust institutions. There's a separation of powers. There's a sense that actually France was a model for many European countries, many years ago. And now there is a growing number of French people who think that the justice system is being politicized, that actually judges are politically motivated, that they're intentionally, casting or judging a certain way to prevent her from running. But a lot of other people say, no, actually, this is completely separate. And she is appealing, so we will have to wait and see whether or not that appeal goes through.
I mean, does it have wider ramifications, actually, for, the far right in other countries?
Yes and no. I mean, I think you've seen the United States, for example, some politicians there and even the administration paying attention to what's happening in France. But at the moment, this is very much a French political issue. But it matters because we do have a presidential election in 2027.
Yeah, and they're doing extremely well in the polls.
Yes, and they have been for many years. She has been persistently facing the runner-off in the presidential election, and the party is ahead in the polls. So yes, it does really matter for the mood in France, but also what happens between now and the presidential election next year.
How is Emmanuel Macron dealing? I mean, is he essentially a lame duck at the moment, given that, it's also been very difficult to find a prime minister and getting the budget through. Yeah. So is he focusing too much on foreign affairs, and does it make him less popular with citizens back home?
Well, I mean, President Macron is unpopular at the moment. Many feel that he is a lame duck. He has lost his parliamentary majority, which means that it's much more difficult for any government actually to pass legislation. But the French president is supposed to spend a lot of time on foreign policy, so that's not a surprise. You would expect the leader of France to be implicated in sort of looking what the United States is doing, what's happening in the Middle East. We've just been talking about many of the crises that are unfolding, and the French do expect him to be active on that. But certainly his call to dissolve Parliament back in 2024, many blame that decision for a lot of the political instability we see now.
Georgina, so we had this, headline about 20 minutes ago saying France will open a consulate in Greenland on February 6th. Is Emmanuel Macron, because also part of a coalition of the willing, kind of key in trying to keep the U.S. at bay on Greenland, but also keeping them on side to try and deal with Ukraine?
I mean, France is one of the two European nuclear powers. It has one of the largest armies in Europe. Its voice in military and security matters really does matter in Europe. And we know that President Macron went to Greenland last year, wanted to show support to Greenlanders. So, of course, this is a signal to, I guess, the United States, but also Greenland and Denmark, that France stands with Greenland and wants to make sure that it feels supported by other European countries. I think we have to take what President Trump says seriously. He says that he needs Greenland for national security reasons, and he believes that actually Europeans are not doing enough to strengthen defence and security security of Greenland and to prevent Russian and Chinese influence. I think if Europeans are able to demonstrate that they are committed to Greenland security, that might help. But of course, that might not be enough to sort of assuage President Trump.
How does France see itself actually in relation to Iran? Again, if you look at all the European countries, certainly compared to the UK, but also Germany, France has strong ties to Iran going back 200-300 years.
Yeah, and strong ties to the Middle East generally. I mean, you saw President Macron trying to play and exert an important role over the war in Gaza and being, of course, very receptive to receiving the new Syrian government, etc., etc. But as a whole, France and the EU's voice in the Middle East has fast diminished. And I think at the moment, Europeans are very much preoccupied about taking their nationals out of Iran, protecting them, and also watching what's happening and making sure that they can continue to that dialogue, the diplomatic conversations, and wait and see really what happens over the next couple of days and weeks.
Georgina, thank you so much. Georgina Wright, they're a senior fellow at the German Marshall Fund. Coming up, the Novo Nordisk chief executive says the company is back on the hunt for deals to boost its obesity portfolio. We discuss the outlook for Big Pharma next, and this is Bloomberg. Despite pioneering the obesity drug market, Novo Nordisk has struggled to compete with U.S. giant Eli Lilly and has seen its pipeline of new medicines fall short of expectations. While speaking at the J.P. Morgan Healthcare Conference in San Francisco, the Novo chief executive told Bloomberg that the company is seeing strong demand for its new obesity pill.
It's been really exciting to launch, and I think when you go around this Congress and hear the excitement externally, we are of course subjective, but externally everyone being excited about it gives you a good feeling. The uptake has been good, but it's really early days for me to go into the details of it. But it really speaks to the fact that we also spoke earlier. There's been a lot of people that are excited about GLP-1 category, weight loss, but did not want to take an injection. There's the taboo of injection, there's needle phobia, and they've been waiting. So we are super excited that we're finally having an offering for this large group of people that have been wanting a pill.
And critically, you have a couple months here when it comes to Eli Lilly. They're slated to get approval sometime in the next couple months. How do you prevent your patients from switching to Lilly's pill, which I understand doesn't have exactly the same food restrictions as yours does, once that is on the market?
A couple of points. When we started actually deciding how to go into the oral segment and decided that we should put our protein and peptide and encapsulate it and take that route, most people thought that this is going to be impossible. Scientifically, you don't find examples of a protein, large protein peptides going inside orally and not being dissolved by the enzymes of your stomach. We were able to do that magically, I would say. But now, of course, we're getting the fruits of that. We have, for the first time, the efficacy of our pill at 16.6% when you take the drug, being exactly equal to the pen version of it, the Wegovy pen, again at 16.6%. That, of course, is second to none. When you take a look at the data from all of our competition in late pipeline or early pipeline, no one has that efficacy. That, I think, is a big leap that we will talk to, not least, of course, Wegovy pill also have the CV benefits that our competition does not have at this point. So I'm incredibly grateful for that. Now, you talked about restrictions. I think there's a lot of drugs that have restrictions, including our own diabetes version of this called Rybelsus, where we have 1.5 million patients on the product and not complaining whatsoever about that restrictions. We have this simple saying of sip and go. So I'm very thankful that we basically have been able to prove that on the market with Rybelsus, and I'm very optimistic that Wegovy pill will show the same.
Mike Dustar there, the Novo Nordisk chief executive. Now, we will talk about drug pricing in a second with Sam Fazeli, but we have a little bit of news out of Japan. We know, we've been talking about it all week, that the Japanese prime minister wants, because of her popularity in the ratings, to dissolve parliament and go to elections. A lot of polls are saying that may be riskier than expected, but we understand that actually we will have more news on this on January 19th, but that the prime minister, Takeshi, said she will dissolve Japanese parliament soon. That is according to another Japanese political leader, Yoshimura. Now let's bring in Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst at Bloomberg Intelligence. So we're going back to obesity drugs and pricing in general. Sam, thank you so much for joining us. Look, the GLP-1 market remains one of the biggest topic for investors. All CEOs are talking about it. It's also changing the way that we consume food or that food companies are behaving. How crowded is this market now?
Well, currently, Francine, there's two players, really, right? So you've got Novo Nordisk and Eli Lilly, and we know that one is edging the other one a little bit because of better efficacy, etc., and that's Lilly, of course. But it's not going to be long. So AstraZeneca, I think, is thinking of going into phase 3 this year with their latest assets, so give that another 2 or 3 years. Pfizer's talked about filing by 2028. So give it to the end of this decade, or maybe 2029, and we'll have several other products on the market.
I mean, the Novo CEO says he's ready for a very big hunt for obesity drugs. Again, is this back to M&A, or I thought some of it was proprietary?
I mean, honestly, we sat down with the team earlier and said, who's available out there? What is there out there to go and buy a big hunt? And I think what we're going to be looking for is other mechanisms coming in.
Right.
So let's say big, not in terms of $20 billion or $10 billion. Let's say big for in licensing and bringing in new assets, new methodologies, new mechanisms that complement the current book of business.
Okay. Talk to me about MFN. So first of all, this is the idea that America wants lower prices in drugs, right?
Yeah. And we talked about this, and Johnson & Johnson's just announced a deal, AbbVie just announced a deal. We talked about this last week, I think, when we were sat together here again. And that dust has, to a degree, settled, and I think you hear that when pharma executives have been talking at the JP Morgan conference, that is not a focus anymore. And what's interesting is Albert Bourla said, what we're working on is deals like the one with UK, where they have promised to spend more money on drugs.
Okay, that's interesting. MFN, most favored nation. So we put that behind us. What are you focused on then this year and next year? Is it drug discoveries? Is it M&A? Is it testing?
So M&A is always a theme, right?
Course.
Because these guys are cash generative and they want to keep adding to the pipeline to reduce the risk of hitting a buffer at some point. What I think we're looking forward to in 2026 and definitely 2027 is a slew of data that's coming for assets that are going to be driving the promise that these companies are making. AstraZeneca's $80 billion. AbbVie, Novo Nordisk, all of these companies, Pfizer themselves, they have a lot of clinical data readouts. And we're going to be very busy in our team analyzing this data as it comes out. How competitive is it? Yep. Is it going to be a $10 billion, $5 billion, or $1 billion product?
All right. As always, thank you so much, Sam, for joining us. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst at Bloomberg Intelligence. Now, again, it is a big day for markets. It's also a big day in terms of geopolitics. If you look at the markets, they're kind of fishing around for news. U.S. stocks are extending some of the losses. Metals actually building on their blistering start to the year. Silver, I think, surging past $90 an ounce. Again, markets are looking at potential catalysts, including Wall Street bank earnings. We have a lot of Fed speakers today, producer prices, retail data, and I say possible because it could come, but it may not come, Supreme Court ruling on the Trump administration's tariff policy. So a lot to look out for today. Up next, Bloomberg Brief, and this is Bloomberg.